All right, let's talk about why you do not want to get a car loan if you're going to be buying a house. This is, basics 1, 2, 3 of financing. All right. So, but this is really for the younger people who just don't know about it, or people who have never owned a home. So here's how it works. Banks come in and they look at your credit, they look at your repayment ability, and they look at your historical payback history. So let's just say you got your credit fixed up, and it's all good, and you pay your bills, right? You're good with that. What they're going to look at is what's called the debt to income ratio. Now, it's really simple. Your debt, as reported on your credit report on a monthly basis. So let's just say you have a couple credit cards and you have a car payment, and the credit cards are $200 monthly payment, and the car payment is a $600 monthly payment. They take that, which is only $800, and then they look at your income. And that basically means what you are showing on your statements and to the IRS. So it has to be on your bank statements so that you provide. You will be providing them bank statements, and it has to be for the last 2 years what you're paying taxes on with the IRS. So they take that and they average it out, right?
Hey, real quick, I know I'm an agent, but a lot of people like to sell for sale by owner. So if you're interested in learning about a course that can help you sell your property for sale by owner and do everything an agent does, then please click the link below. There's a little place where you can sign up, and I'll send you all the information.
So your debt to income ratio is what is your debt and then what is your income. And they take your credit debt, whatever's reported to your credit bureau. Then they add your housing expense, which might be rent. Let's just say you pay $1,200 in rent, $2,000 total, $1,200 plus $800, $2,000 total that you have, that you're using. And then your income, and let's just say you're making $3,000 a month that you're paying taxes on. So now they see that you have your debt to income ratio, 2,000 to 3,000, that's 66.6%. 0.7, I guess, if you round up. And that is a disqualification. You cannot get a loan with that. They want to see no more than 50% for a regular conventional loan. If you go FHA, you might be able to get up to 60%. But FHA has PMI, or I think they call MPI. Either way, it's mortgage insurance premium, MIP, I should say. I apologize. So at the end of the day, it's basically not a good idea for you to have high debt and low earnings. Not that $3,000 a month is low earnings. Well, it is to some people, but in Florida, it's very low earnings because you can't buy a house with that. So what can you do? Well, what you can do is get rid of your debt, right? You can get rid of your credit card payments. That means you pay them off completely, and you remove $200 of your monthly obligations, and now you're at $1,800, $1,200 plus a $600 car payment, and versus $3,000, right? And you still can't qualify, okay? So what can you do? And it comes down to what I said at the beginning. You don't get a car payment. That's it. You don't get a car payment. I think the average car payment in the US is like $600 something. That's absolutely crazy, bonkers. It's so dumb. Don't be dumb. Do the right thing. If you want to look good and drive a nice car, then you're not going to have any business buying a house, okay? Unless you make a lot of money. And that's hard, especially as a youth, as a young person, right? Someone who's under 25. It's hard to make $250,000 a year, especially on a W-2 income. So now, what can you do is you don't get the car payment. So if your car breaks and you have to get a car to get to work, you don't get a car payment. And if you do get a car payment, 12 months. That's it. 12 months. You go to the buy here, pay here place, you buy a $6,000 car, you have a $500 monthly payment on that car, and you're not buying a house in those first 12 months. That's it. Do that. If you want to be smart about it, if you want to make some money in your life. Now, if you want to look good, then do it. Then buy the car, get the payment, okay? Because you're buying a depreciating asset. And not only depreciating in real life, but depreciating in to the IRS as well. And what are you buying when you're buying real estate? You're buying an appreciating, depreciating asset. That makes no sense, but it's true. You're buying an asset that over time goes up in value. Car over time does not go up in value, but it's an appreciating, depreciating asset, which means that according to the IRS, your building depreciates and you get tax advantages by owning it. So if you're going to go and try to go for the route of making money in life, and let's just say you're 25 right now and you want to make some money, then get rid of your car payment. Get rid of that car or pay it off, period. Downgrade your car. I did that. On my first property, I was 21 when I bought my first property. I had a car and I had a $350 car payment, and I ran into this problem. Now, this was a long time ago, you know? I'm 45 right now. I had to get rid of my car, and my job was 2 miles away, okay? Straight road on Fruitville Road, right? So what did I do? I got rid of my car, and then I owed money on the car. So I paid that off. And it was just like $1,000 or something. It was a $13,000 car, but my car payment was $350 or $347. I got rid of it. And for 9 months, I rode my bicycle to work because I wanted to buy a house. I ended up buying a townhouse, but that's just, you know, details. And I'm so glad I did, because that got me into real estate. And once I owned that property, I rented the rooms out, and I had more than my mortgage payment paid for by tenants. So I had no rent costs, and then I had even a little extra to go towards a car payment. But did I get a car payment? No. I bought a car for $2,000, and I drove a hoopty because I was on a mission to become wealthy. And I know that back then, 20-something years ago, being a millionaire is not the same as being a millionaire today. Today, it's like almost everyone's a millionaire, but at least my age. But, you know, back then, that was the goal, is to become a millionaire. And, you know, it took a little bit of sacrifice in your youth when you're healthy and strong. Well, most people are healthy and strong and resilient to life's pressures, and patient too. Whereas, you know, now that would be a lot harder for me to ride my bicycle to work. That would be quite a lot more challenging than it was back then, right? So don't get the car payment, get the house, make some money. And if you want a little bonus here, buy the duplex, all right? Buy the duplex. Rent out half of it, rent a room in your property, and now you're on your path to becoming a millionaire.